Charlie Munger has a great quote. He said, a lot of people with very high IQs are terrible investors because they have very bad emotional control. In order to be successful in investing, you need to keep raw, irrational emotion under control. Now, I paraphrase it slightly, but the point is that success in investing isn't about the numbers. Actually, it's rarely about the numbers, and here's why. If you're just a dollar cost averaging person who buys at all times, that emotional ability to do that is enough. That's all you need in order to be successful in investing. You don't need to be able to understand balance sheets and profit and loss statements and cash flow and all these crazy numbers. All you have to do is say, I'm in this for the long haul. I am buying when it's down because if I pay less, I'm going to get more return. If you just do that, you will match the market and you will beat probably 99% of investors out there. Because one of the things I look for when it comes to where we are in the cycle is how many people are in on stocks versus how many people are out. This year, we've seen a 20% drop in the S&P and an almost 30% drop. At one point, over a 30% drop in the NASDAQ. And my comment has always been, time and time again, in the hundreds and hundreds of videos we've made, that we're nowhere close to a bottom. Why? Because I still haven't seen people give up yet. I haven't seen people throw in the towel. The hardest part about investing is the emotion. And unfortunately, when it comes to the emotion, I need to see the emotional outburst on the downside as well. Guys, remember, investing is a pendulum. It swings side to side. Euphoria versus depression or down in the, whatever you want to call it. We've been here for a long time. How do I know that? When SPACs exist. When people are willing to pay more money for a company that's losing money than for a company that's tried and true but looked at as boring. When I see average everyday people giving me investment advice. When the waiters and waitresses at a restaurant, and it's not to knock them. When the caddies at the golf course, when the kids are telling me that I don't understand something, that's when I know we're too far on the euphoric side. It's too easy to make money. When stocks go up 11 of the last 12 years, whatever the number is, that tells me things have gotten too easy and euphoric. Where do we need to go? Let me tell you where we need to go. We need to go to the opposite side. And the opposite side's right here, where people say, I don't want to own stocks. In June of 2003, I had a job, and I was sent to Dallas for training for this job. It was a bunch of us young people. There were about 10 or 15 people being trained. And there was one female in the group. And I remember we were talking about investing, and she said, well, you can't invest in stocks because you can only make 3 or 4% in stocks. This was June of 2003. Please go back in your calendar and look back at June of 2003. It was basically the bottom after the crash of 2000. That same market in 2000, a friend of mine in college, he was older than me. I remember finally one day saying to him, listen, pal, you're like 5 years older than us. What's the deal here? Why are you just in college? He goes, listen, when I graduated high school, the internet boom was happening. I went into investing. He goes, Paul, it was so crazy. We were pissed if we made 300% in a day on a stock. We were pissed. So you went from this extreme of 300% per day was bad to this extreme of 3 or 4% if you're lucky. Because that's all you're going to get in stocks per year. That's the euphoric difference. Now, we look at every boom and bust in history. You look at real estate in 06, 07. Everyone was a real estate investor. Everyone can make money, and then everybody gets wiped out. I'm not saying we all have to get wiped out, but we have to get to the point where people are giving up, and we're not there yet. And the psychology part of it is a part that will make you successful. Because we look at the history of stocks, and you look at this chart that I've drawn 1,000 times. This is where stock values go over time, but this is how they actually operate on an ongoing basis. This would have been 2000. This is 2003. This would have been 2007, 2009. But we're in emotion. Looking back on it, what would you say? Well, yeah, you want to buy here, 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 and so on. But what ends up happening? People buy here, 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 and here. And that's when I sit there and say, hang on a second. Think about it logically. What does it take to get the massive overvaluations? Is it really fundamentals? No. As Warren Buffett says, every bubble starts on a very logical premise. It's great to own a home. Well, home prices only go up. Okay, fast forward a few years, you have low interest rates driving things. Before you know it, you can't lose money in real estate. That is the statement that's made. That the best investment for the long run is real estate. Then what do you have? You have a bubble. It bursts. We have problems. Okay, Fast forward. Then you have, oh, by the way, crypto. Crypto to me is the poster child for this bubble. Crypto and Tesla. I look at crypto and think to myself, here's something with no substance behind it besides the belief that everybody feels in it, as opposed to some sort of intrinsic value. But yet people, including, especially young people, tell me that I don't get the technology. Well, fair enough. Probably don't get the technology. But when you have over 10,000 cryptocurrencies and you're starting to see the fraud level that's occurring, it makes me realize more and more that the emotional part of my ability to sit there and take a step out and say, if everybody believes in this, then I have to go against it. My friends make fun of me and they call me Contrarian Paul. Like I brag about being contrarian. I do brag about it because I realize how much that helps me. When everybody believes in something, I immediately have to question it. But everything in this world, I immediately have to question everything that people believe. Now, are there some things that I have to accept? Yes. Gravity. Everybody believes in that. But there is scientific evidence for gravity. You have the scientific process. You can test it. You can do all these things. But when it comes to companies and valuations and people's emotional reaction to those things, I have realized, I've been very fortunate at a young age to realize that. But I was in your boat not too long ago. I wasn't born with this mentality. Was I born with questioning? Yes. Did it help me along the line, probably learn earlier? Absolutely. But it took a process for me to understand that. When I was first getting into real estate, I bought at the peaks. And my first big real estate deal ever, I greatly, greatly regret. But it helped me along the way. It helped me learn my lessons along the way. And before, when I bought a piece of real estate, I said, Paul, you're going to manage it, you're going to cash flow, and hopefully someday the value's gone up. My viewpoint on real estate has totally changed. Now I buy a piece of real estate and I know I'm going to make good money. Why? Because I have a set amount of money that I'm there to deploy. And my money had taken a lot of effort to earn. So I'm going to put it in deals I feel very, very confident with. Now, the difference with real estate versus stocks is there's no Mr. Market telling me every single day what my real estate's worth. My goal is to just drive the profit and revenue of the piece of real estate. But that's no different than a stock. My goal is to buy companies in which I think that 10 years from now than today, they will make more revenue and profit than today. But more importantly, the price I pay today will give me an ample return on my money based on that growth. That is the key. Everybody out there thinks, oh, this is a growing market, therefore I should buy this and therefore it'll go up. No, like cannabis, like electric vehicles, like growing real estate markets. Everyone's going there. Everybody's doing this. Cannabis will be a much bigger industry 10 years from now than today. Electric vehicles will be a much bigger industry 10 years from now than today. The big growing cities of the South will grow much further 10 years from now than today. But if you overpay, which is especially more likely in those kind of hype areas, you will not do well. And the emotional fortitude it takes to have that realization and to take a step back and say, everybody's crowding this, I need to be more cautious. When there's a lot of money chasing a few ideas, it causes prices to go up. And if you understand that what you pay for an investment is going to determine your return on investment, that's when you'll be able to crush it because you'll find the investments that are being ignored. Potentially, companies that I've bought as of late that look very, very boring and very non-sexy because they're down 20, 30, 40, 50%. And I'm okay with that because the way I view it is I'm buying a growing, cash flowing business. And as long as I do that, I feel that eventually Mr. Market and the regular market will see the value at some point. And my goal is to just buy a good company at a great price. Warren Buffett always says, it's better to buy a great company at a fair price than a fair company at a great price. I think you can do both. It's all relative. Are you going to find better value in smaller companies? Absolutely. But relatively speaking, will I be able to buy great companies at great prices? Yes. They won't be as big a discount, but I don't need a big discount on Microsoft and Google and Apple and all these companies. I need a reasonable discount. I need the market shift to occur. I need that pendulum to swing where people have given up on Apple. That to me, Apple and Tesla will be the last companies to fall all the way down. When people have given up on Apple, that's when I feel, okay, we are getting close or we're there. Because that's been the one company, even last week, they reported earnings that went down 10% and then finished up that day 5%. That to me said, this is good. Apple is not there yet and it'll probably take a while. And I'm okay with that. I'm happy with that. The key is to take the emotional aspect out of it. Use the emotions of others to help make your decisions. There's a great book out there by Morgan Housel called The Psychology of Money. Every single person that asks me what to read, I say, read that book first. No, Paul, I want to read. No, read that book first. Because in order to be successful in investing, in order to not go broke, you have to understand the emotional side of investing. You absolutely must. Because if you find me somebody, I can teach you the numbers all day long. And we do that on this channel all day long. But I can't teach you immediately the emotional aspect. You need to experience it. And if you're in my position, I was in your position 10, 15, 20 years ago, I believed that you buy a ticker and you just watch it go up or down. No, you're buying a piece of a business. And there is a difference between price and value. The emotional aspect is the hardest part. I work on that every single day to this day. I'm 41 years old. When I'm 100, I'll be working on it every single day until I die. That is the goal here. But that's why I created the community. Because the community of investors that we have here, thousands of people talking every single day about their ideas, about individual investments and new investments. I get challenged every day on questions and comments. Paul, what about this? What about this? And some of them, most of them are really great questions. And the funny part is usually the best questions are, Paul, I know this sounds dumb, but I'm like, no, investing isn't a complicated matter. We just make it more complicated because it makes us feel better about ourselves when we're sitting there and able to say, oh, it's complicated. It didn't work out. It's because of how hard it was. No, you're buying a cash flowing business. And I use this software every day to go find my investment ideas. I'll sit there. I have my watch list. What I did here was I have 97 companies that I watch. I put the values in them. I went and analyzed them using our stock analyzer tool, using analyst estimates. I'll sit there and determine what kind of assumptions I want to make for the future. And it tells me what price I want to pay for the company. I add it to my watch list, and now I will get an email, a notification on my software and on my phone on the app. And when it hits the price, I can go in there and do more research, sell puts or buy it, whatever I determine it to be. Whatever the right path is for me, that's what I'm using the software for. I sit there and I use the software for my retirement calculator. Now, for me, it's a little bit different, but for some of my friends, the first thing I do is let's go to this retirement calculator. Let's put in your assumptions here. Do you have enough not only to retire, but most retirement calculators stop short. They'll sit there and say, great, you have $2 million in retirement. If you pull 5% a year, you're going to pull 100,000. And everybody's like, yes, I have enough. No, you might not have enough because you're going to live a lot longer than your parents and grandparents did. You have to make sure that you have enough to live the rest of your life. That's why we ask, what age do you expect to live to? That's important. I want to make sure you not only have enough money for retirement, to get to retirement, but also to live the rest of your life. Because the last thing I want you to do is wake up 15 years after retirement and go, oh crap, I don't have enough money. And we're going to live longer and longer lives. So it's important you realize you need enough money to live the rest of your life. I will sit here also, and I will go right to our 8-pillar search, and I will type in the parameters. And this search is becoming even better now. It'll allow you to pick certain parameters and edit your 8 pillars yourself and compare it to our 8 pillars, because this is what works for me. But if you don't look at companies that way, great. I don't look at companies the same way all my value investing friends do. My value investing friends have a wide range, but the point is being an investor and being a value investor is about buying a dollar for less than a dollar. How much less? It depends on the company and the situation. Apple's going to have a much smaller discount than some obscure $100 million company that is still in its growth mode. They're very different situations. But once you understand that your job is to buy great companies at great prices, then you will do much better. You have to block out the noise, block out everything on the internet you read, block out what your friends are saying. If I listened to my friends, I would be broke. And I love my friends. But the point is, I have to have an independent thought process that eliminates as much emotion as I can do. We have a great thing here on the tools, 8-pillar portfolio. You can put all the stocks of your portfolio in here, and it'll pop up. How does it look from an 8-pillar perspective? Let's say you own companies like Apple, Tesla, HPQ, Baba, Walgreens, Google, Microsoft. get stats. It pops it out for you like it's all one company. Boom. This is how your company looks from an 8-pillar perspective. Here are all the revenue, process, all these things. It does it automatically for you, and you can save your portfolio and pull it up in the future. Other tools we use, other tools we have, exclusive video content. Every single day, Mo and I post content exclusively to the users on our chat. Guys, the chat is incredible. Look at all of these topics right here. All of these ready for everybody to talk. You can go in there, you can search topics, you can search everything. This is all available, guys, for less than $1 per day. That's it. $1 per day gets you this software, and you're locked in at your level, whatever you sign up for. Everythingmoney.com, or for international users, patreon.com/everythingmoney. Go there right now, sign up for less than $1 a day, just the emotional aspect of letting you be able to sleep better at night. If I said to you right now, for $1 a day the rest of your life, would you like to be able to sleep better because of your finances? If you said yes, this is a no-brainer, and you get all the extra tools along with it. Go sign up right now, everythingmoney.com. You will not regret it. There are 3 things that you absolutely need in order to be a successful investor: the proper mindset, the proper emotion, and the proper process. Which ones are the most important?